This is the Mortgage Breakdown, where Andy Baker and Andrew Clarkson break down everything mortgage.
Everybody, this is the Mortgage Breakdown, episode 8.
It is. We're not going to let the virus win. We're back at it. We're doing it.
Exactly. We've pivoted and we found out a way to keep the broadcast going.
Right. Adapting forever in the changing environment.
So I noticed you're still in the office right now.
I am. I am one of the very few employees actually coming into the office. Obviously, being in the banking world, we're keeping things going, keeping loans flowing, keeping the money going. So, yeah, it's actually easier for me because both my wife and kids are all home, obviously, now, too. So, a little quiet space, a little focus, you know.
Yeah, totally. That's probably a way better work environment for you, so you can avoid distractions, right?
Right. Well, I see you're in the comic book shop.
Yeah, this is the home office, and you can tell what my interests are based on my background.
I haven't seen blank walls.
Yeah, I know. You got to put like your degree up there or something like that. You know.
I can get it in right there.
Oh, there you go. Oh, there it is. Nice. Awesome.
Right there.
Cool. So, Andy, what are we talking about on today's Mortgage Breakdown?
Nothing really. I mean, nothing's going on out there, right? Everything's business is normal. You know, everything's just A-okay right now. But let's talk about the COVID, the coronavirus, and what's going on in the mortgage industry. Obviously, that's on top of everybody's mind. That's where we're all at right now.
Yeah, you know, I've noticed a couple things that have come out of this thing that are positive. One is communication. I've never had better communication within my company ever. We're on daily calls 2 times a day. And even with like a big body like Fannie Mae and Freddie Mac, they pivoted and they totally updated their appraisals and their VOEs. They just said, hey guys, these are gaps that our lenders are facing and that borrowers, you know, need action on right away. How do we do it? And it happened. So do you want to start off there and like maybe let's talk about the Fannie Freddie update first?
Sure.
And how that's kind of affecting us, you know, those states that are under the stay-at-home or shelter-in-place orders, and you can only go outside for necessities, essentials. And so where are we at with appraisals now?
Yeah, well, that's kind of been the big thing. Obviously, like you're saying, you know, it was nice to get some guidance there from the GSEs and from everybody. I think everybody's in limbo for a little bit, you know, to some point still are trying to just figure everything out. But that was kind of the big thing. Obviously, the scare right now is, you know, letting people into your home, you know, that social distancing that we're supposed to be practicing. And so Fannie and Freddie both came out with, you know, if it's a purchase, they'll do an exterior or a desk review only. So no need to go inside the home. If it's either owned by Freddie or owned by Fannie, depending on who you're selling it to, if it's a rate and term refinance, they'll allow an exterior only as well. Kind of the caveat is still the cash out refinances. They did not move on that. That's still a full appraisal. But what's been interesting, you know, I've been giving a lot of kudos to our appraisal companies out there because they've been getting very innovative, very creative, you know, working with borrowers, you know, prepping them to say, hey, I'm going to have to come in your home. Please have all the lights on, all the doors open. You know, we'll keep our social distancing. If you want to choose to be, you know, out in the backyard or you're not even home, that's even better because obviously, you know, you don't want that close contact or that risk there. And so we're making it work, you know, and I give a huge shout out to that appraisal community for stepping up and, again, being creative and innovative like that.
Yeah, totally. I've noticed likewise as you, that with the appraisers that are out there, you know, they're taking the same reaction from some of these states that have the shelter in place orders where they can't, you know, go outside and they can't conduct regular business, even though they may be considered an essential part of the financial services team. A lot of them have pivoted off of, hey, you know what, we're going to protect the borrowers out there. We really don't want to go in the homes. Right. And they're still open to getting these appraisals done with the crazy flood of volume. Let's talk about the interest rates now, because the crazy flood of volume that we've faced, you know, we have a certain capacity as a company, and we've been over that capacity every single day. It seems like nearly this month, you know.
It was kind of the perfect storm. I mean, everybody was just crazy busy before any of this even hit. And then now trying to adapt and change to this, you know, I know a lot of institutions, you know, kind of artificially raised their rates to, you know, kind of slow that faucet of volume coming in. But then, yeah, after, what's going on with the treasury markets and the stock markets, they were just all over the place. I mean, I would call 3 different lenders and get 3 completely different rates, this
Right.
last. But
Yeah, I would get the ones where it was, we were getting shopped against other lenders, and it's like, what are you doing shopping right now? Lock your interest rate in, It's like, this might not be here tomorrow.
Right. Yeah. When we're recording this today, Chrisman put out his forecast for next week's rates, and it was just a scribble, just up and down. Who knows? It's all over the place. Every lender is different right now.
Absolutely. Yeah, it's not just the treasury market, the 10-year treasury. It's not the bond market that's dictating it. It's demand too. In a lot of cases where these lenders, like you just said, that have such a flood of business, they don't know what to do, and they need to shut the hose off, or it's going to negatively impact their business model, their business structure. And too many applications in the system isn't good for anybody, right? Because if you can take the application but you can't close it, then where does that leave you? So you had those lenders that were artificially inflating interest rates up just to stop the business from coming in. I noticed that even on the price comparison tools that you see online, that you can, it's the generic lending tree ones basically, or whatever they are, but those were quoting interest rates when we're in like the 3% 30-year fixed range. They're quoting interest rates at like 5 to 7%, just because they couldn't give any more of these leads out.
Yep. Yeah. I've been reading a lot of things. I mean, obviously rates will come back down and stabilize once we're kind of past all this, hopefully. But that's just kind of the big question is when will we be past all of this? When is this going to finally subside and, get back to normal again?
Yeah.
So, yeah. Given everything that's doing is we should have low interest rates for a long time.
Yeah. And one thing that I've been doing too, because traditionally we run a purchase business over here. We're not so much a refinance business. Which is great, right? But at the same time, when you have to like switch, it's almost like, okay, we have so much business coming in, and now we're neglecting all of our great partners that we've established relationships with over the last several years, where it's like, we got to check in with these people and say, hey, what's going on with your business? And how can we support you? A lot of the states right now, Michigan in particular, realtors are considered non-essential. So they've had to shut down their business operations. Basically, they can't go and show homes. They can't go to listing appointments. They're trying to do everything virtually right now, which, for some that are set up to do it, great. But at the same time, listing a home, for all intents and purposes, that's kind of like you need an in-person, meeting with your person, with the seller or the buyer, right?
Yeah, it's been interesting. I've heard a few of those stories about people getting creative, with the virtual tours and the virtual walkthroughs and things like that. But yeah, again, it'll be interesting to see how that all plays out. And then obviously too, what's on a lot of people's minds is delinquencies, and if we have a large increase in foreclosures or just people needing to sell homes, if that's going to bring that inventory market back up, all things to just kind of keep in mind and watch as these next couple of months pass us.
Right. And that's, another topic that we can talk about too are, since people that are, considered the non-essential part of, the workforce that have been temporarily laid off, or they can't report to a job that is only in person, there's no work from home option for them. We saw a record number over, was it 3 million Americans filed for unemployment today, cumulatively by today. Which is unheard of. And you can see out there just that number alone, how bad people are actually hurting. So what, have you heard of for like it's not part of the stimulus package, but the agencies also release some information on either pausing mortgage payments, or giving some sort of temporary relief. What if I was a consumer? What advice would you give me? Where would I go first to look for that information?
Right. Obviously, if you can keep making your payment, do that for sure. But go to your servicer, go to your lender that your mortgage is with right now, because a lot of people are trying to do get ahead of this already. And do skip a pay, or, go into, interest, forbearance and things like that. Just work with you, because that was the guidance from the agency, that they're not going to criticize any like modifications during this time, as long as it, makes sense and things like that. They don't want to repeat 2008, 2009 again. They want to work with people. They want to make sure that we don't get spikes in foreclosures, that we can get people, past that 3 or 4 month gap, where they might be out of jobs or, short on cash, to try to keep them in their homes, basically. So,
yeah, I mean,
definitely talk to your lenders.
we're coming off of an interesting time here, because unlike the 2008, housing collapse, that was, that economy struggled due to the failure in the housing system. We're coming off of a 12-year period of an all-time high. And it's driven by a virus that's making everybody stay inside and not having to go into work. But the underlying economy is still great.
Yeah.
So go ahead.
No, it's just going to be interesting. A lot of people were talking about, part of the stimulus package was, bailouts for companies. And it's like, I read something, it's like, don't call it a bailout, because it wasn't their fault. Like, it wasn't like someone made a bad business decision and got greedier and, we're bailing them out. No, this was, we have to all pull together during these times and make sure that, no one goes under, small business or large business,
Totally agree with you in that respect. It's not because of financial mismanagement. It's because this virus is making our leadership in the country say, hey guys, let's take a pause, stay at home. You can't go into work. And I'm feeling for all of those businesses that rely on in-person contact, like our restaurants. I have a restaurateur and friend in Grand Rapids, and it's just like, the restaurants didn't do anything financially mismanagement wise to avoid this or procure this. It just happened to them because they're kind of part of it. So with the stimulus package, what I saw is that, part of that 2 trillion is 500 billion in immediate loans for certain businesses. My hesitation, my worry about it is that we're not going to see a lot of that stuff with, the relief with the small business. This is more aimed at like big business and making sure that like the blue chip companies of the United States don't fail because of it. Automakers, airline companies, 50 billion going straight to them. So, what would you say for the loan officer out there, or person in mortgage production, operations? What's the next play for us? Like, what do we do next?
Yeah, I mean, really, the big concern obviously is getting through the volume that we have now, and again, working with your borrowers, working with, your colleagues and people like that, to try to keep this thing going. I've been very happy and pleased with, the people I work with, that, that everybody understands what we're going through, that it's going to be one loan at a time, that there are still, boundaries set up to. That's kind of the unfortunate, like we were talking about, with people losing their jobs. When the agencies came out, they did give us some leniency on, on verifications of employment, but things like that. But then that last paragraph said that, you still have to show that these people have the ability to repay, and so, especially like these smaller business owners that are going to get hit the hardest, that's going to be the unfortunate thing is, we still have to show that, you plan on going back to work in April or whenever we're, past all this, that you still are going to have a viable business at the other end of this. So it'll be interesting.
Yeah. Well, that's a really good spot to, kind of wrap it up here, too. So any final thoughts on the rest of it, where we go? I know you just, mentioned it's kind of like we're all in this together, and it's one day at a time at this point, and we just have to kind of see how everything unfolds and continue to move business forward. Anything that our loan officers or anybody out there listening should hear before we wrap up?
Again, just continue to do the business as we can, as best as we can every single day. Again, a huge shout out to, all the different people that are adapting and making this work, the appraisers, the title companies, everybody out there that's been really, stepping up and, making this happen. And then again, too, watch the markets. It'll be interesting to see, we always talk about, like you mentioned, make sure you are, this is a good time to stay in front of your referral partners,
Yeah, absolutely.
If it does dry up, that there's still business out there to be done. So
Well, I appreciate that. This has been a pretty cool, way to keep the mortgage breakdown going, and you'll probably see a few more episodes set up this way too. Everybody out there, please like, share this video, and this has been episode 8 of the mortgage breakdown. Andy, thank you.
We got it like through the screen. We got to like
boom, boom. Oh wait, there, this way.
Oh yeah, elbow.
Elbow. Oh yeah, elbow. Boom. All right, thanks everybody.
Thank you for listening to this week's episode. Tune in for more breakdowns.